Oil is gushing today. As you can see, crude up a little more than $76 and change. Brent is at $79.63. By the way, these contracts both hitting their highest level in over 3 months today, as you can see on your screen. The spike coming as the Biden administration is delivering a parting blow to Russia's oil economy. The White House announcing sanctions today, targeting 2 of Russia's largest oil companies and 183 oil tankers in what a senior official called the most significant sanctions yet against the Russian energy sector. Now, despite the geopolitical headwinds, Goldman Sachs research is not forecasting a big jump in Brent prices for 2025. The investment bank releasing a report yesterday that predicts Brent will trade in a range of $70 to $85 per barrel this year, with an average of about 76. Joining me now in a Fox Business exclusive, Goldman Sachs Global Commodities Research co-head Daan Struyven. And Daan, it's great to see you. You've done a lot of research that you've released just this week on that. Let's first talk about these sanctions from the Biden administration against Russia. Now that the concerns about inflation are over, the Biden administration in their last days has put them in place. The question is, will Donald Trump enforce these sanctions?
Yeah, thanks a lot for having me. It's definitely a broad package affecting the full supply chain of the Russian oil industry. Producers, traders, export terminals, insurance companies. I think the two big questions now are, as you pointed out, number one, will the Trump administration continue these tighter sanctions on Russia? And second, as Russia has sort of built out this alternative supply chain, how much bite are these sanctions really going to have? Our base case does not look for significant disruptions, and Brent indeed staying in the 70 to 85 range. But this strengthens our view that in the short term, the risks to oil prices are very much skewed to the upside, both because of the possibility of lower Iran supply, which seems to be a big focus of the Trump administration, and also possibly, especially during this transition period, of potentially lower Russian supply.
Yeah, they're calling it the shadow fleet, the Russian shadow fleet, because with Russia exporting, in particular with all of these vessels, it's not that the United States didn't know that these vessels were out there. It was that they just weren't willing to do much about it, in particular with the inflation story. But Gazprom and Surgutneftegas, those are the 2 companies. You know, this is liquefied natural gas as well, which if you look at Western Europe, the problem has been Western Europe has been concerned about being cut off. With a new incoming Donald Trump administration, we can kickstart out those LNG exports again to Western Europe. Does that, on the nat gas front, is that in your thinking, and what are you expecting?
So we have seen not only a rally in oil prices this week, we have also seen pretty significant rallies over the last 2 weeks, both in US and European natural gas prices. Yeah. On the back of colder winters across the Atlantic. Sometimes winters can still be cold, after all. And also, structurally, the European natural gas market is still vulnerable. We have lost about 30% of supply in the European natural gas market with the end of Russian pipeline flows. And we think that this vulnerability and this sort of lack of competitiveness of Europe in terms of producing energy-intensive goods is here to stay at least through next winter, until all these extra LNG cargoes arrive, both from the US, which is ramping up 3 big LNG export terminals this year and next, and then down the road later this decade, a lot of cargoes from Qatar. So Europe is still in a vulnerable spot, and we see a significant risk that European natural gas prices could easily rally another 40% or so if weather realizes cold, or if we see additional supply disruption.
Well, and I will get to Iran. I'll circle back to Iran, but I want to pick up on the U.S. cold weather story, because that's something that you and your colleagues write in your research is about colder weather here in the United States, the technical side of the oil contract, but you really talk about oil demand for heating, and that you do see, despite you're seeing potential declines in Iranian crude exports, really the weather story in the United States. In fact, we're going into a weekend expectations right now. I mean, you've got 45% of the nation that uses natural gas. I mean, that's going to affect prices, no?
Yes, so we have seen a pretty significant rally in oil prices over the last couple of weeks, not only because of increased risks of lower supply in Iran and Russia, not only because of a 7th consecutive drop in U.S. crude inventories, but also because of colder weather. Colder weather can boost energy prices directly because of a boost to heating oil demand. Also on the supply side, maybe we're going to see again freeze-offs across North America implying lower production. And finally, and this is a little bit more technical, if European natural gas prices rise very sharply, you will have to balance the European natural gas market by moving demand away from very expensive natural gas to oil, for instance, diesel. And then you would get another boost to oil demand through that channel.
Now, let me stay domestic with you just for another moment, because the Biden administration, they were sued. The state of Alaska filing suit on Monday against the Biden administration, and it's over these it was the Trump era law, basically, that was to establish access, the awarding of leases up in the Arctic National Refuge. But the way that the restrictions are playing out, the state of Alaska, the governor there says that they're really, because of the laws, there's really no way for them to cost effectively drill at all. So they filed suit. We don't know where that's going to go. Again, though, we're going to have a change in administration, and the term is drill, baby, drill, which I'm sure you've heard.
Absolutely.
How does that play in to the story?
So boosting U.S. energy production is an absolute top priority for the incoming U.S. administration. We do think that over time, regulatory easing may support U.S. oil production. In the short term, though, we think the main drivers of U.S. oil production are prices and shareholder discipline. So we think of this as medium-term upside to production, but in the short term, we don't look for large effects.
Real quick, I got like 10 seconds, but with the incoming Trump administration, you believe that they're gonna really push on those Iranian sanctions, and that will hurt their exports.
Base case, a modest drop in Iran's supply, but the risks are skewed towards significantly larger drops.
The risk is big. Daan Struyven, thank you so much for being here. We appreciate it.